Brent crude hits $90. Markets panic. Europe is scrambling to fill tanks, but they are already running on empty. Wait a minute. While they panic, China is silent. They are not buying on the surface. They are buying underground. Let's look at the physical reality. Beneath these coastal granite mountains, there is a hidden ocean. 1.4 billion barrels of oil. This isn't just storage. This is a massive, permanent, pressurized weapon. It is sitting there, waiting for the price to break the world. Is this sheer strategic genius, or are they prepping for a total energy war? Comment number 1 for strategy, 2 for danger. Let's do the math on the cost of the steel they never had to build. Forget the steel tanks you see on the surface. They are high-maintenance toys, leaking billions in evaporation every year. In the world of elite infrastructure, we look at the geology. China uses the water seal principle. They blast these caverns deep below the groundwater table. The pressure of the surrounding water is higher than the oil pressure inside. This creates a permanent natural barrier. Nothing leaks out because the water pushes in. It is a perfect self-sealing, zero-maintenance vault. Steel is a liability, but the earth itself, that is the ultimate indestructible containment. It is not just storage. It is the mastery of fluid physics. Now look at the contrast. The surface steel tanks, they are industrial liabilities. They suffer from physical evaporation, losing millions of barrels to the sky, and they require constant, expensive maintenance to fight corrosion. They are fire hazards, occupying massive, high-value coastal land. Now, look at the underground alternative. It is a geological fortress. Stable temperature, zero evaporation, and zero maintenance. The rock provides natural insulation, keeping the product pure for decades. While your rivals are busy painting rusted steel, the underground system remains silent, efficient, and indestructible. It is not just a tank, it is a permanent asset that thrives while everything on the surface decays. Look at the structural integrity. We talk granite and gneiss, not cheap factory alloys. This system holds for 50 years without a single structural inspection. No rust. No painting. Steel is a ticking bomb of maintenance costs, but this is geological silence. Engineers watching this, tell me, is there any man-made material on Earth that can survive 50 years without one drop of maintenance paint? I challenge you to name one. The math is simple, and the durability of the Earth is unmatched. Look at the rock walls. They don't decay. They just sit there, holding a billion barrels, while the world above fights over rusted steel and leaking pipelines. It is total, permanent, silent control. Let's talk about the $10 billion. This is not just savings. This is the price of dominance. While Europe buys oil at global market rates, China is playing a different game. They are the primary buyer for sanctioned barrels from Russia and Iran. Because of their massive underground storage, they have the leverage to force deep discounts. They pay $12 less per barrel for Russian euros and $11 less for Iranian crude compared to the Brent benchmark. Multiply that by millions of barrels flowing into their ports every single year. The result? $10 billion in pure direct savings. This is money that flows right back into their industrial machine, not into a hedge fund. It is how they crush European export prices. Here is the verdict. This is not a reserve. It is a strategic subsidy. By slashing the input cost of energy, China creates a massive advantage for their domestic factories. Think about it. While German manufacturing pays the full market price for every barrel, Chinese firms are running on discounted fuel stored at a fraction of the cost. They are using the $10 billion they saved to subsidize electricity, transport, and raw material processing. This allows them to dump cheap, high-quality goods into European markets. They are not just winning on price. They are using the mountains as an economic weapon to hollow out the European industrial base. This is not trade. This is a total economic siege disguised as energy security. Here is the bottom line for your portfolio. If you are an investor, stop watching the oil price on your screen. It is noise. You need to watch the infrastructure. The hidden value is in the logistics, the storage, and state-controlled physical assets. When you see nations building deep earth vaults, you are seeing a shift in wealth. This is where real money hides. It is not in speculative paper trades. It is in the control of supply chains, concrete, and energy independence. Look for companies tied to deep infrastructure, hardened logistics, and the materials that build these subterranean fortresses. That is how you stay ahead of the next energy shock. Stop chasing the price. Start following the concrete. This is where the elite are moving their capital while the world sleeps. If you want to survive the next crash, bet on the steel that never rusts and the stone that never moves. Watch the infrastructure. Everything else is just a distraction. Here is the final truth. The elite watch the concrete, while the naive look at oil prices on a screen. The real power is carved into the earth. China has built an impenetrable fortress that makes global energy volatility irrelevant to their industrial machine. Their storage is not just a safety net. It is a strategic weapon that turns the entire Western sanctions regime into a useless bureaucratic exercise. On paper, they have shifted the battlefield from trade, wars, to physical infrastructure. Now, I have to ask you, when the world's largest manufacturer achieves total underground energy autonomy, what value do Western sanctions really hold? Is this the end of traditional trade leverage, or is it the beginning of a new subterranean era of energy dominance. Tell me your verdict. Is concrete the new gold, or are we just watching the slow collapse of the surface economy? Comment your thoughts below. The math is brutal, but the facts are solid.